Welcome, everyone, to today's webinar, Navigating the Storm, the New Reality of Escalating NatCat and Unpredictability. As billion-dollar weather disasters become routine and claims teams navigate increasing uncertainty, traditional models are under pressure, cracking under the weight of climate volatility, operational fatigue, and regulatory fragmentation. Today's discussion isn't about forecasting the next storm. It is about confronting the storm we are already in. We are facing more than extreme weather. We are facing complexity, talent gap, third-party actors, litigation spikes, infrastructure stress, and supply chain disruption, all converging into a system that is buckling under the weight of its own design. So what now? We need to challenge outdated responses, question business as usual, and unlock the new tools. Yes, artificial intelligence, automation, predictive analytics that allow us not just to respond, but to anticipate, adapt, and reimagine catastrophe strategy from the ground up. So over the next hour, we will explore what it means to be truly resilient, how to balance human expertise with machine intelligence, how to plan for scale without burning out your team, and how to shift from creative payout to proactive preparedness. I'm thrilled to welcome an expert panel today who will help you understand how they each address this single challenge, or many actually. So I'm really pleased to welcome Kat Rees, Chief Claims Officer at Sage Sure, Robert Cole, Managing Director, Chief Property Claim Officer for the US at March, Sean Crowley, SVP Head of North America Claims Operation at Sampo, Chris Kalaldi, VP Property Claim and SRJ at Grand Insurance. Let's get into the real questions that we want to address today and to face the operational truth that will define how we lead through this new era relentlessly and, with so much unpredictability. Remember that there is a Q&A, so please ask us questions, and you will see that our panelists will be able to answer them for you. So just be active with the Q&A and we will answer your questions. So let's get started. I'm going to throw my first question to Kat. When we are going to start rethinking what NatCat risk means, really. So Kat, given your role, right, and your frontline experience, how has the increased frequency and severity combined natural disaster we have seen out there changed the way you deal with triage and assign claims across your organization?
Yeah, thanks, Sabina. I love this question because it hits on a few things I'm passionate about. Using machine intelligence, getting the right work to the right skill, and having a solid org design to back up any kind of CAT response. So I'd say a big step has been using models and the intelligence we get from first notice of loss to help us really truly understand our claims as they come in. So for many events, we're lucky to have aerial imagery. That imagery can help us understand what's happened to our customers before they even tell us that they have a loss. And that lets us start off even before the claim happens with triage in our outreach. So for example, after the California wildfires earlier this year, or really during the California wildfires, we were making outbound calls from our senior adjusters to customers who had clear total losses or visible fire damage and imagery. And then we had our first notice team calling customers that were near the perimeter or within the perimeter, but didn't have visible damage in that imagery. And then as a third level, we sent digital messaging to customers who were kind of outside of that range, just in case they were impacted, to make sure they knew who we were there for them, and that they could contact us if they need to. And then to keep that kind of triage going, as we get claims in, we score severity. We can do that both on our observations, right, from that imagery, and from what our customers tell us. And so that lets us get claims to the right resources. As an example, in California, every single wildfire claim was handled by one of our field adjusters or one of our senior inside adjusters. in a large SES event where we've got more volume to go around, we want our field handling the severity, right? Trees that have fallen on houses, things like that, with independent adjuster partners supporting us on the moderate or the light severity claims. So getting it to the right skill at the right time. And then finally, the org design piece where we're looking at internal flexibility. So we want our senior adjusters, for example, to be able to both handle a workload of claims, but also if we're in a surge situation, to be able to flex and help supervise third parties. And so making sure they've got those flexible skills, and especially if there's a chance of consecutive events, which kind of like you mentioned in this environment is every day, right? We need to make sure they're always flexible based on what the events require, and that we are always really looking at our skills and our gaps so that we're ready to respond.
Yeah, thank you, Kat. So we talked about wildfire right now. Chris, let's go maybe and talk about convecting storm. How are you adjusting claims strategy address such disaster in response of shifting population dynamic? And partly because when you think about the fact that regions are very different, right? There's different exposure and different volatility when even you look at different part of the United States. How do you address that, partly in non-coastal states?
Yeah, great question. I think one of the key callouts in your question is we get a lot of attention around evolving weather patterns and changing weather patterns, and not enough conversation around population concentration. And that's really where modeling comes in, right? We try to leverage modeling to look at, for us as a Midwest carrier, severe convective storms are our primary focus. We try to look at where is the weather frequency going to occur, and where do we have our policyholders. We've strongly encouraged collaboration between our personal lines and commercial lines partners so we can understand where their 3, 5, 10-year roadmap are headed in terms of growth. We can then align our claims resources both internally from our staff adjusting field, whether it be field and inside teams, as well as our external partners. And I think that's the key call out, especially from a NatCat standpoint, is we want our partners to be a true partner with us, not a transactional partner when that surge hits and it becomes a scramble and everybody's chasing fee schedules. And, a lot of those conversations become very challenging when you're trying to manage an operational response. I touched on the modeling a bit, but I think doubling down a little bit on what Kat mentioned, there's an opportunity even with that modeling and the use of aerial imagery with AI to go to the next level, right? The aerial imagery we've been accustomed to, I think when you intersect that with weather data, that can be a powerful component to assist triage, still relying on the boots on the ground feedback, but then leveraging the AI component to maybe more quickly enable the teams to respond. And then lastly, looking at past event analysis, what went well, what opportunities may exist, and trying to have a continuous improvement mindset so we can build on each event for our policyholders. At the end of the day, delivering on that promise to our customers when they need us most is when we'll show up, and pulling together the human element as well as the technology element will allow us to win.
Yeah, absolutely. So, Robert, I would like you to address both, right? Wildfire and storm, right? We've seen 2017 Santa Rosa, 2018 Paradise fires, 2023 La Haina fires, and 2025 Eaton and Palisade events. And we're still thinking about those today. There have been a lot of those storms. There have been a lot of those hurricanes as well, Milton, Hurricane Elaine as well. So from your vantage point, Robert, what have been the most significant NatCat claims trends for you over that period? And what do they reveal about how risk is evolving?
Well, thank you, Sabine. I think everybody's been touching on wildfire, which has been a very great theme for the past 8 years. Every year seems to be an evolving wildfire year. We used to have wildfire season. Now it seems to be wildfire all throughout the year. I mean, LA was just a recent example where we had very strong wildfires in January, which is not a normal year that we experience that on the West. And I come from a geography being in the Western United States. So we see quite a bit of this The magnitude and devastation of these wildfires, it has been intense, quite a bit more than what we've witnessed in the past. I've been looking at wildfires for over 30 years, and what we've seen from 2017, 2018, 2020, 2023 for Maui. So it's quite a unique development, and this has been fueled somewhat by climate change, somewhat by development in areas that are, traditionally wildfire exposed. Paradise, California was a great example of that, where development had, gone into areas that are known wildfire risk areas. So that has been a trend where development has expanded into these areas and has increased the magnitude and intensity of the devastation for insured risk. So wildfire being one area, hurricane is another area. Well, the frequency of storms that we've seen in my seat has not necessarily been greater. Some of the magnitude of the storms from a rain event has been increased. These storms are becoming warmer and wetter, increasing the amount of rain and flooding in areas. Hurricane Helene last year was a great example of something that was not necessarily in an area that we would have expected to see such a great hurricane exposure. So those kind of trends are what we've seen developing over the last year, and expect it to continue with a warming climate.
Yeah. I mean, I know we are talking about NatCat, but just a week ago, right, I was posting about the flash flood in New York. This happened in Paris, in my city, and just last week we had major fire in some of the forest in London. So this is happening all around the globe, and it's actually accelerating as well. So, Sean, for you, what are the most common coverage gaps, ambiguities we need to start solving, and how can product design better align with real world cat damage scenarios?
Thank you, Sabine, for that question. I think this is a very big and important question. And as I touch on this, I also want to go back to the previous three questions and just say that I think bringing all of that together, there's a lot of focus that we put on customer experience and how we're going to support them and respond in a cat event. There's also a significant opportunity, I think, to support our internal customers when it comes to understanding cat and the changing dynamics of what is happening, especially the convective storm patterns that we have been seeing over the last couple of years. And so a lot of the newer cat modeling tools that are built for claim, as opposed to, say, your cat modelers in your pricing areas within the companies, really give you insight that you wouldn't have had before, and being able to pull analytics together and understand where the impacts are, and kind of where your risks overlay and are exposed across the country. And so we've taken the time to begin to implement various AI-powered tools that allow us to go beyond just developing a response strategy, and really looking at how we inform our underwriting teams and pricing teams so that we can build resilience within our pricing models to understand what's happening and where things are moving. Tied to the question in front of me, relative to the common exclusions and the products that exist today, I think, when you look at it, both personal lines and commercial lines together, probably the three most common exclusions that exist are your flood, quake, and water damage in some form or shape. And, just as I think about how you want to redesign products, we've really got three areas here. You've got your outright exclusions, just excluding the peril altogether. You've got deductibles and sublimits that come into play and help manage that risk, as well as support the underlying policyholder. And then you got to think about how secondary perils begin to play into those exclusions and what the impact is going to be. And so, a very common, in the past 2 years, probably 18 months, I'm seeing more and more wind damage exclusions, or not wind damage, water damage exclusions that are being brought back either through large deductibles and or sublimits or a combination of both, so that you can both provide a solution to the policyholder and at the same time still protect your capital and be there for the next storm. If you think about Hurricane Helene, it was probably one of the largest unexpected secondary peril events that we've seen in a long time. And so, we all expect the wind and surge coming through Florida, but I don't know that anyone expected a hurricane to impact the likes of Asheville, North Carolina in the way that it did. And so there's a balance that I think has to happen, and that is, protecting the capital while also being able to deploy that capital in a way that provides solutions to all of our risks.
Yeah, and that is beautifully explained, right? We have a risk, and then that risk, you have the deductible and all the things which, goes into the policy. But often there is another risk, right? There's another risk often attached to that primary risk. And so that is what insurers are trying to protect themselves, because otherwise the claims can become really, really large. So I think, Sean, I have a question for you. Do you observe satellite data in your process, or are you thinking about using it? And, I would extend that question to everybody on the panel, starting with you, Sean.
Okay. So we do. Okay. We, as part of our deployment of our claim cap modeling tool, part and parcel in it is a satellite imagery. It's important not only from a high level top down view, but also to be able to get to those large risks and understand what you've got in the footprint and what the impacts look like early on. As well as being able to tell you a story early, whether it's going to be an impactful event to you or not. What we do.
Anyone want to pick up on that question? On the other options?
Yeah, I would just echo what Sean said, similar for us. The other element is combating fraud. The use of historical images have been a powerful tool, giving us a view of policies that have been on our book for a long time and how they've aged, as well as some of the newer policies, just to ensure we're not inheriting any pre-existing damages.
Mm-hmm. Kat, I would probably come to you as well as Robert on this other question, which is about, when you start handling multiple cat situation, how do you share resources? How do you strategize to make sure you have the right solution at hand? Can I start with you, Kat?
Yeah, absolutely. So I think it's sort of a combination of things. It's your operational readiness, right? And then it's how you build your organization to be able to flex. So I'm a big believer in the term anti-fragility, right? You can be fragile, so you break when you're hit. You can be resilient, so you kind of break for a little bit, but then you come back. But anti-fragile, you just absorb all those cats that come at you and get stronger as a result. And that's really our goal, right? And so with that, we want to have the org structure set up so that we can flex, adjusters, supervisors, managers into multiple roles, depending on the cat, depending on the number of cats that hit consecutively, and the types, right? It's kind of hard to develop a playbook for this because there's hurricane, there's a hurricane on one coast, an earthquake on another. There's 2017, we had Harvey and Irma. And each of those will change how you have to respond, right? 2004, a bunch of hurricanes hit Florida. You're switching resources around within the state of Florida, which is not nearly as operationally challenging, although after 4 hurricanes, it got there, as a Harvey Irma situation where you have folks in Houston and then in Florida and a solid, 14-hour drive between them, or different types of cat events that require different resources. So I really think it's making sure you have a lot of resources on tap, that you have good relationships with third parties so that you've got the loyalty and the adjusters there when you need them, that you can flex the type of resources you need. So do we truly need adjusters on everything? Can we have some inspection only resources? How do we appropriately deploy engineers? And just have that, call it kind of the menu of options for how you respond to those multiple cats, and being able to pull what you need where based on those existing relationships and just the nature of the events that are going on.
Yes, great. Robert, anything else you want to add from your perspective, looking at everything, right? Storm, hurricane, wildfire.
Well, sure, Sabine. I mean, as Kat said, I think right sizing, I mean, multiple events or extreme events. I mean, I go back a few years, and Superstorm Sandy was one of the largest events that impacted our organization from a number of claims. And so you either have a magnitude event or multiple events for four storms in one year that were of great intensity. We, I mean, likewise in our organization have great resources, and sometimes we're expanding into out of our property area. We have casualty advocates that will step in that are also very well versed in being able to deal with NatCat events. So you have to right size the event and be able to have the resources available for our clients. And so, knock on wood, we don't have another Superstorm Sandy anytime soon, but I would go from there.
Yeah, absolutely. We have another question, and maybe I'll start with you again, Robert, because maybe you have a different perspective. Are there intelligent data systems that you are leveraging today to understand the impact across your entire book of business as to what is happening? If so, would you have any recommendation on those systems, and what are they doing precisely?
Well, from a standpoint of systems to look at our entire book, we utilize the modeling of from our organization, from our reinsurance arms, to look at our entire book, but also a broader book of business that extends even outside of the accounts that we personally deal with. So we'll look at the modeling there. We have real-time modeling of storms, predictability. We look at the utilization of, as we were talking earlier, of satellite imagery and AI to kind of model the exposure for our client base, so that we can proactively contact our clients, looking at things that are in the path of oncoming storms, to proactively reach out and get together with our clients, so that we're in advance looking at being able to address and respond to an event.
Mm-hmm. Chris, are there any specific systems you are using to look at your entire book as well? And we'll ask this question to all of you if you want to answer or provide any recommendation looking at this perspective. I'll start with you, Chris.
Yeah, absolutely. So we do have an internally developed cat mapping solution. That internal solution does consume third-party data, particularly the weather. We overlay the swaths of weather over our PIF. And this is one area where I think it's really important. Claims continue to collaborate internally with actuary and the personal lines and commercial lines business partners to ensure we're getting the right information on our risks from a damageability standpoint. So obviously, right, there's certain things underwriters and agents, we write through independent agents, they're capturing at the policy acquisition, but there's some gaps there. And I think while we can't be too cumbersome in that process, we need to look at where's their third-party data that could help support that model be more accurate, especially around damageability and damage ratios to help get, I think Kat had said it best, getting the right resources to the right claim. And then the last thing I would just share is leveraging the modeling that we receive from our reinsurance providers. Those provide us good indications, but also making sure as that gets distributed throughout the organization, any nuances that maybe we're reporting out to claims, calling out, what are we seeing from boots on the ground versus maybe more of that predictive report that the reinsurance partner is providing.
That's great. Sean?
I hesitate to say ditto, but it's kind of ditto to where
Okay.
we're looking at a lot of in the same ways we're using our reinsurers broadly across all of our portfolios. Looking at it, we subscribe to one of the known modeling companies, so that all of our property risks actually go through a modeling tool to understand. And from a collaboration standpoint, as Chris just pointed out, we work very closely with and have actually have a claim representation on the CAP modeling team. so that we can bring both of those sort of platforms and functions together to understand broadly what the impacts look like, what the risk exposure layout looks like, and where we might have vulnerability. And so there, I can't recommend a specific company to the group, unfortunately, but what I can say is that there's half a dozen well-known modeling companies that provide tools around this. There's a number of new insurtechs that are coming into the industry that are very claim specific, and they've gotten beyond just predictability, but based on patterns and behaviors, really are starting to produce credible results relative to being able to forecast what your exposure really looks like. And so there's a lot of good opportunity for research and just talking to some of these companies.
Yeah, and we are going to meet a lot of them at Connected Claims. So let's go into operational resilience, and then I will dive into the next set of questions, because I think we are going to touch upon some of the questions we have on the side with that operational resilience angle. Yes, Chris.
So if I could just add one thing, I think it's important, going back to your earlier question that Sean spoke about in terms of changes in policy terms and conditions. All of our historical data may not be as relevant. And so it's really important internally as an organization, we have the right conversations around what's the impact of now wind hail deductibles to that data. Will we no longer see segments of claims that we once saw because of just overall higher deductibles or customer sentiment around how they want to use their insurance? So just a really quick call out of, again, that collaboration between all the stakeholders. So the model outputs can while that new experience bakes into the model, at least people understand what the maybe limitations or impacts may be.
Yeah, thank you, Chris. So I want to jump on that question around speed and accuracy. And I want to talk to a lot of carriers and then talk to the insurtechs, right? A lot of carriers are looking for speed and accuracy, Kat, right? So how you do balance the urgency for that speed with the necessity for that accuracy in high volume CAT events when ballooning claims are increasingly common in our sector?
Yeah, I think unfortunately there is a lot out there to combat when it comes to increasing claim costs. And, one of the key things there is a number of third parties that are in the claims process these days, particularly on a CAT. We've got the door knocking roofer type stereotype that's a stereotype for a reason. Some of those folks are genuinely there to support customers, try and provide repairs, get them back to normal. But we do have some people who are out there to make as much money as they can as quickly as possible off a natural disaster. And as a claims team, it's our responsibility to settle those claims accurately. I mean, we've got to be really good stewards of our customers' premium dollars. And if we are kind of allowing folks who are benefiting from the process in ways that don't help the customer get back to normal profit, then that's inflating claims. It's inflating premiums, because that eventually comes back around to all of our customers in those claim costs in the form of increased premiums. The market gets harder, those premiums go up, right? So there's some tactics that we do use to make sure that we can help the customers get back to normal. Sean mentioned earlier, that emphasis that customer experience is key. And that's absolutely right? When customers buy insurance, they're getting that promise that we'll be there if there's a covered loss. We want them to feel confident that's the case, but a lot of times they've purchased the policy and then they don't look at it again until something bad happens, or even worse, they've had to flee their house. They don't even know who their insurance company is, right? They're trying to figure it out. So that's one of the reasons, as I mentioned before, we rely on a lot of outbound messaging. We want them to know who we are, how to contact us, that we are there to support them, right? That's, insurance has kind of a bad rap with the general public, unfortunately. But, one of the things I love most about being in claims is that we get to help people after something bad has happened to them. And so really emphasizing that part of what we do. Making sure that when they've filed a claim, they know who to talk to. So we email and text the adjuster's contact information within about 5 minutes of that first notice of loss, so they know exactly who's helping them, how to reach out to them. They can just reply to that text with photos, with questions, and get help. in the first notice of loss process too, we are talking to them about their claim, making sure they know we want to understand their damages, talking them through things like those deductibles that Chris hit on that have been kind of increasing as policies have changed, and making sure they understand that as part of their claims filing process. But really emphasizing the empathy, the policy knowledge, and straight talk when we're training our adjusters, right? So in those CAT scenarios, there are third-party resources in the mix. We want them to have really good training, and then as they're going through that claims process, help the system to guide them through everywhere we can to make sure that they're consistent as they talk to our customers.
Yeah.
And like you said, efficiency is key, right?
Yeah, efficiency is key.
Yeah.
And so how confident are you in the tools you're using to ensure that they are leveraging accurate data, and then you're comfortable and confident as well in the reliability of the information you are getting? And that is, one of the questions coming to us right now.
Yeah, so I think when we're talking about the reliability of the information we fielded and we have, I'm extremely confident in that, right? It's third-party information. I think that question was kind of getting at some of that too. When we're getting information from, here are the wind speeds that were at that property, right? I have a little bit less confidence in that than I have in the, picture that we have of no roof on that house. And so, we're talking third party type data, 70 to 80%, right? It's going to be at least directionally correct, but there's not a sensor on every single home, right? So we've got to layer in what we know, what the customers told us. Then when it comes to our data, one of the things that we're pretty proud of at Sature is having a lot of accurate fielded data about our policies and our claims. So very confident there.
So earlier, Robert, Sean was talking about deductible and, exposure and all the things. So how do you see underwriting terms and conditions continue to evolve in the future? And what does that mean for both the insurer in terms of sustainability and the customer in terms of insurability within the next 5 years?
Well, that's a good question. And I'll kind of key on some of the points that have been brought up, and I think Chris brought it up too. Underwriters have underwritten their books pretty well over the last 5 years to try to evolve to address some of the NatCat risks. Limits have gone up or gone down actually, and deductibles have increased. Obviously, in certain areas, there's been a lot of capacity restriction in wildfire areas, which has driven, availability of capacity. So I don't necessarily see that trend changing. I see that underwriters are going to stick and maintain to try to underwrite their books. Pricing is a thing of the marketplace. Pricing may go up or down, but I think terms will evolve to address the evolving NatCat risk. I think this is kind of an existential risk for some of the underwriters that just to remain viable, they have to, utilize their capacity in a way that they remain viable. So I don't see terms changing. I think some of the losses we've been seeing, I think Chris brought up that may change. With deductibles increasing, some of the NatCat windstorm losses we used to see and we aren't seeing because of large deductibles, basically having the clients retain a lot more risk than they used to be. So we'll see larger losses, but maybe not the amount of losses that we've been seeing. And that's more on the industrial commercial side that I deal with at Marsh. But I think that trend is going to continue as we have greater storms and wildfire. And I see Sean had a question.
Not a question. I just want to add on to that, and that I think it's been an issue for years, and I'm speaking really toward the commercial side of things, but insurance to valuations is one of the top three that I would consider issues that needs to be solved industry wide, and so that there is just this absolute rampant or inherent undervaluation of properties that is not intended. There's no intent in this. It's just a factor of the rapid increasing in costs and in price that has led to a significant undervalued property portfolio kind of across all verticals. And I'm starting to see more and more underwriters address that issue by putting on occurrence limit liabilities or inflation clauses that begin to limit what is paid out to replace or rebuild certain properties. And so, as we talk about that it's just an issue that I continue to try to put into the marketplace, in that there continues to need to be a solution relative to how we get better, more accurate valuations of properties, because it impacts the entire life cycle of that policy.
Yeah.
That I agree with that, and I from my vantage point have seen quite an increase in the concern for valuation, and even where clients do a good job in trying to estimate the replacement values at the time of binding insurance. We get into catastrophe situations, whether they be surge pricing or different things, that even valuations that are proper sometimes are not adequate, and in different, as we go forward with the effects of things, of tariffs and other things, it becomes very questionable as to whether certain valuations are right or wrong. So I feel what Sean's saying, definitely.
Yeah. So there is another things which is coming to mind, but I would like to come to you, Chris, first, to talk about, we are talking sometimes about the internal property, but looking at the external property as well, going back to the usage of technology. What do you see the role of, aerial imagery, satellite data, drones, and a lot of other technology now we can use, right, to acquire data to make better predictions, to actually increase the precise value of loss and assess those losses?
Yeah, absolutely. Before answering that, I would just like to supplement, I think, your question to Kat on quality on the claims outcome, and then also some of Sean's comment. I think this is where data analytics plays a key role. So on the quality side, leveraging real-time analytics on what I'm going to call exception-based estimating, right? Are there line items in the estimate that just don't belong? And how do we do that more real-time than through closed file reviews and some of the legacy routines we've had in the past, re-inspections and so forth, because we can equip those adjusters, right? All of our adjusters, whether internal or external, they want to write an accurate estimate. So how can we equip them as real time with that feedback? And then to Sean's comments on the quality of information, again, exception-based reporting, right? Again, we write through independent agents, but if our average personal lines deductible is X and we have a small book of agents that is significantly lower, again, from a claims person's background, maybe that's somebody we would need to ask the question why, right? So I think being more prescriptive on how we're leveraging a lot of the data we already have, just how do we leverage it? Now, to your question on aerial imagery and those things, I think at least as our organization has evolved, we went through different periods, right? We chased some shiny objects, right? We realized what was the benefits of those and what were maybe some of those limitations. We're really now focused on what's going to move us forward, right? Let's not play in a sandbox with a lot of tools that maybe we haven't vetted enough ROI or impact down to the adjuster level. Now, that being said, I want to emphasize we still need to stay abreast of those tools, right? Like we can't fall asleep and be passed up. So for us, aerial imagery, I think, is one of the ones we continue to build on. I touched on, if you layer in the aerial imagery with the property characteristics, the weather data, and leveraging AI, that can be really powerful from both a loss triage from an assignment standpoint, as well as some damageability ratios. And I can't underestimate the fraud component, the bad actors that we all see from time to time. I like to look at it this way: whatever tools we're using, they likely have a similar tool, right? And if you think about the storm chasers, they can sit just as easily as we can behind a desk and look at all the worn out roofs in Chicago, Illinois, right? And where do you think they're going to show up next, right? The biggest, worst roofs. And so by us leveraging those type of technologies, we can not only implement that into the claims process, but also making sure we're sharing that feedback loop through underwriting notifications, right? So then they can take the appropriate risk actions as deemed by their practices.
Yeah, thank you, Chris. Sean, I would like to talk about partnership now, with the current surge of the current rising demand for search capacity that you already mentioned earlier. How are you rethinking partnership and certification and external adjuster and TPAs? And as a result, I will also ask you maybe to answer a question we have also on the side on the use of engineering, and questioners wondering whether those partners are slowing down the process.
So I was looking at that question. That's a really good question, a really relevant question. And so first, perspective. Our commercial property portfolio is very much a market shared and layered book of business. And so with our business generally comes designated account adjusters or market adjusters. And so we are restricted, if you will, in how we develop and build our partnerships and who we work with based on who's being written into policies and who's actually got that business and managing their claims. While that brings an amazing customer experience to the client, it creates some challenges relative to capacity. Because one adjuster is one adjuster, right? And ensuring how we support those adjusters, those market adjusters, becomes critical to how I have formed our partnership playbook with our independent adjusters and other service vendors. And so we do have a governing framework around this where we ensure that we've got clear and articulated MSAs. We have specific SOWs and SLAs that we put out to all of our claim service vendors to ensure that they are working toward the KPIs and the goals that we want. We ensure that they are committing to providing us with either support for those account adjusters or they are providing us with a overflow team to ensure that we've got the right capacity where we need it. We may have clients that have 1,000 locations, like in the Texas freeze, that are affected, and so you end up having to move waves of adjusters across the country just to deal with a single event. But we have instilled that governance around it. It helps us ensure that we can commit to our policyholders that we've got the right resources there and that they can use the resources they want. To the question on the side, whether it's engineers or any other expert vendors that are always brought into sort of the contracting team on a large commercial loss. Again, upfront, we want agreements with these vendors, whether they're engineers, accounting firms, emergency service responders, whoever they may be, so that we've got them on the front edge of any particular event. Our clients can reach out to them and they can engage them rapidly so that we can get them in and do their thing and not impede the cycle of that loss more than it needs to be. When you look at the disparity between a personal lines claim, which I think I saw somewhere in the papers, a 34-day cycle time on average, we're looking at 24 to 28 months on a typical cycle time for a large commercial loss, in an event like a hurricane. And so it's really important that we've got those people engaged up front and that there's clear SLAs in place for them to move their portion of that loss along.
Thank you very much, Sean. Yes, Robert.
I just wanted to chime in on that and definitely appreciate what Sean's saying. That from where I sit is definitely one of the frustrations that we get into is cycle time that we're trying to affect on larger claims. The more complex the programs, quota share will grind things to a slower halt. And certainly if we can get engineering vendors, different vendors in place before an event that's vetted out with a client, that can certainly help in moving the cycle time. So just my 2 cents.
Yeah, that's superb. Kat, I think I have also a question for you. Can you maybe share one small change in your triage or assignment rules that saved real time off first contract?
Yeah, so our triage is immediate. When we get the claim, everything's assigned a severity score, goes to the adjuster. I think the thing that has shaved the most time off first contact is an immediate text and email to the customer with the adjuster's contact information. I think everybody in claims has experienced phone tag. Not as many people want to answer for unknown callers. And so by giving the customer that contact information, putting it in their hands so they can program it to their phone or expect the call, it really helps us to get in touch with the customer. And it's also a two-way channel of communication. It's not a no reply email or text. They can reply with questions so we can start having substantive conversations before we make phone contact.
So let's move Kat into future forward response modules, right? Where do you see the greatest short-term ROI from AI in Cat claims beyond the buzz, right? Because we have a lot of buzz and hype around artificial intelligence right now. What do you think truly works today?
Yeah, I think we've already talked about kind of first notice of loss and those severity projections and where that's adding value. Ingesting documents is another big one. So we get so many PDFs, photos, letters in the mail, right, from our customers, the representatives. And it takes time out of the adjuster's day to just first go through them and see what they are and then prioritize, right? When everything comes in as a document, where you can't tell what's a time demand versus what's kind of a basic estimate, it is hard to prioritize without going in and doing some detailed look. So there are tools out there that can do that for us, help label the documents and really help prioritize them for either a human review or to say, you know, this is just somebody replying to an email saying, thank you, we don't need to look at this one anymore. I also think that it's helping us shift, you know, how we look at the claims process, right? So claims aren't always you're going to do steps A, B, C, and D. There are some claims where you're going to go straight from A to D, and others where you need to take every single step. So AI can help us identify based on first notice of loss, what's already been done and documented, where the claim is and what the right next steps may be. I think we're still early stages there with a lot of tools, both internally and externally, but I think that is kind of coming up as, you know, a claim that understands its status and then can help the file handler know here's what needs to be done next, and even who's the right source to do that, and start getting that in flow.
Yeah, thank you. So I just want to go to Chris now, because I think it would be great to actually look at some of the most pressing challenges when managing catastrophe mandates, you know, rate caps and mandatory coverages. Often when we have one of those NatCat events, it touched one jurisdiction, but it touched also other jurisdictions. So starting with you, Chris, you know, what do we do? What can we do better, right? What needs to be considered in those situations?
Yeah, I think from a first from a response standpoint, and I think whether it's a multi-jurisdictional event or just events in whole, we can't lose sight of our associate well-being, right? And making sure we're taking care of our associates. Their job is very challenging. They're met with more resistance today than ever, and more complex matters. So just making sure we support them with emotional well-being resources throughout the enterprises that we can offer, so that way they can show up as their best self. More organizationally, I think this is where we want to leverage our compliance and regulatory partners internally, have a close tie to the departments of insurance. Again, for us in the Midwest, we're fortunate to not have, some of the challenges that maybe showed up in some of the other states of some of the other panelists, but I'll speak in the Midwest. We're really focusing on looking at the terms and conditions, right? Not just focus on from a rate perspective, but what are those terms and conditions? How can we sustain a business model, right? To where customers can still afford insurance, but also understanding the cost of claims continues to increase. And then when it comes to an actual CAT operation, the compliance and regulatory departments inform us of any DOI mandates, right? If it's relaxed timeframes that are being urged by the departments of insurance, really getting that to the adjusters first and foremost, so we don't create any unintended additional work on the back end or claims end up in litigation as an unintended consequence. So for us, that's kind of where our focuses are. But I'm sure there's some other perspectives and maybe some states that are known to be more challenging.
Sean, can I come to you?
Absolutely. So this is where, tied back to the last question I had relative to TPAs and partners, is ensuring that in those SLAs, our partners all understand and have protocols in place to know, to understand, and to follow all of the various state regulations and compliance laws. Because our model is so reliant on outside firms, it's really critical that because at the end of the day, it's our paper, and so a state doesn't care who handles the claim, it's still us. We need to be sure that those partners understand it and are putting those protocols in place, and that is first and foremost. And we certainly, like Chris said, rely heavily on our internal compliance department. We collaborate very closely with them, from everything to just understanding the new rules that get published on an ad hoc basis, and then the various state reporting requirements. States like Florida, they think 5 days before an event even hits, they're hitting you with what their reporting requirements are and wanting to know everything about your book of business. So it's critical to have the resources and wherewithal to be able to meet those reporting requirements.
Kat, anything you would like to add?
Yeah, I think just second what they've said so far, and emphasize that relationship with the internal compliance and reporting departments is so key, and that from the claims perspective, we're putting the right data in so that their jobs become easy.
Thank you. Well, Rob, I was going to ask you, actually, when we look at our industry, we need to adapt customer communication strategies, right, to maintain trust and deliver value to the customer during increasing unpredictable event. How do we do that? What would be your best recommendation?
Well, from our standpoint, we, depending on what the event is, we are ready and we adapt. We have client ready papers that we'll put out in an event that addresses, coverage issues, terms that may be involved. We'll set up webinars such as this with our clients and internal partners to discuss through issues. It's interesting. We talk about CAT events. So one of the largest CAT events we had in the last 2 years wasn't even weather related. It had to do with the Francis Scott Key Bridge collapse in Baltimore, and that was an adaptation that we hadn't thought through. But we adapt. We take our internal resources to brainstorm the different coverages that may come in play, questions that our clients may have, so that we're ready at the time of an event to openly communicate and frequently communicate.
Superb. So one question for all of you, and we'll try to see how that goes. If you could fix one regulation to help customers and carriers, what would it be? Can I start with you, Robert?
I could fix one regulation.
One regulation, I know. I'm thinking about Mario Payne one, but yes, if there is one regulation that could be fixed.
Oh, that's a good question. I'll have to defer on that for a second. So
Okay.
Go to the next and I'll come back to you.
We want to try.
I've been looking at that question, thinking about how I would answer it. And I think that one of the most critical regulations has already been fixed in the state of Florida. In 2022, Senate Bill 2B fixed and addressed the whole AOB issue, the multiple attorney issue. And I think that was a wildly successful bill that has really changed the paradigm in that state. And so, as I look at all of the various states, most of the issues are around reporting, but with the exception of Florida. And so, to me, the most important regulation has been fixed.
Anything else, Chris? Or Or Kat?
Yes, I think the cognitive dissonance I have with some regulatory entities is insurance is so heavily regulated, right? Everything we do, our timelines. And then those third parties we mentioned, the claims process, the public adjusters, roofers, have much less stringent regulation, licensing depending on the state. And so to kind of shore that up and make sure that everyone involved in the claims process is getting the same level of scrutiny and held to the same standards to make sure that the customer is ultimately the one that is taken care of versus those third parties.
Chris, anything else to add?
I think it was well said by both. Maybe this is a little bit more tactical, but I think worth offering is looking at the appraisal process within the policy. If you think of the evolution of all the challenges that we face, and Kat hits the nail on the head, right? We're highly governed. The bad actors are not. And so how do we find an appraisal process or alternate dispute resolution that is probably a little bit more of a level playing field, ultimately to make sure the proper indemnification for the insured takes place, but it's done in a meaningful and timely way. And I think there's an opportunity to look at the language across the policies, both on personal lines and commercial lines for that.
Yeah. So I'm going to ask one last question to all of you, which is, my inspiration question. So we have been talking and navigating the storm, the new reality of escalating NatCat and unpredictability. So if you had one recommendation, one top tip, one single action people listening to us could take tomorrow, starting with you, Chris, what would that be?
Continue to invest in your people, both from a well-being as well as technical. We talked a lot about AI. There's going to be the human in the loop that's going to need to be a key component of that. So just continue to invest in your people.
Sure.
So complementary to that, invest in your data, work with your internal data people, and have a strategy.
Kat?
Yes, Chris took the best one. I think make sure that you're combining how you use your technology and your vendors with how you're using your people, and that you're deploying the right resources where they need to be.
And Robert?
For your loss planning, I would emphasize that organizations that anticipate losses and plan for it and strategize with their insurer partners will come out better on the other end.
Thank you to all four of you for this great conversation. I mean, today's conversation made one, I think, clear. We are no longer preparing for the next catastrophic event. We are already living in a continuous state of disruption. And what we heard was a collective call to move faster, smarter, and more deliberately, right, with the right system, the right people, and the right processes. Moving from reactive firefighting to proactive operating modeling. From relying on legacy talent pools and third-party search staffing to building adaptable, augmented, anti-fragile teams. From treating claims like isolating events to recognizing them as brand-defining moment of truth. The new CAT landscape is actually being redefined, definitely by escalating severity, market fragmentation, and regulatory complexity. But the real test we are going to see, all of us, is how we adapt, not only through technology, but through leadership, collaboration, and we heard the term collaboration quite a few times, and clarity of purpose. So I would like to thank you all for joining us today on this Reuters insurance event. I look forward to meeting a lot of you with Kat, Sean, Chris, and Robert in November at Connected Claims. But I know before that, in September, there will be Connected Underwriting. So on this note, I wish you a great afternoon and some of us a great evening. And I look forward to seeing you soon. Bye-bye.